G'day there, everybody. Thanks a lot for joining me as at this Tuesday afternoon market recap. Over the next 10 minutes or so, I am going to go over the US financial markets Monday through Tuesday and also give you some brief targets as to where I expect these markets to move towards over the coming couple of weeks. I'll also transition through our top 12 individual share list. Today, most noticeably, Google reported earnings closing down very close to $100 per share. However, we are at a very important level of support. So although, again, the bears are out for Google, it wouldn't surprise me whatsoever very quickly to see this ultimately hold its current support area and over time begin to close the open window, which has developed between the close yesterday being that of Monday and, of course, where we closed today is at the close of business on Tuesday. Before we get there, however, let me just give you a recap of what the S&P 500 has done over the past 2 days. Really, in a nutshell, it hasn't done a whole lot. However, we are starting to see a little bit of mixed candlesticks reflecting a little bit of short-term indecision in the marketplace up and around these all-time highs, this past resistance area. Now, on Monday, we have a little bit of a hybrid shooting star candlestick, and today you can call this, in particular, again, a little bit of a hybrid hangman candlestick. You can see the upper pronounced wick on Monday, and then, of course, we started today's session relatively weakly, but we did claw our way back on up, not only to make back those early session losses, but also to close above where we were as at the close of business yesterday being Monday. So again, we're just continuing in that bullish trend. We're still holding up above these exponential moving averages. And to me, it makes a lot of sense that this market is going to naturally gravitate towards its psychological round number, the magnet that is 3,000 on the S&P 500. Here we are, we're closing at 2,945 on the S&P 500. Expect a little volatility, a little bit of short-term molecular uncertainty, but over time, all right, notwithstanding, of course, a correction, you should see the S&P 500 pierce its way on up, or at least grind its way on up to about 3,000 on the S&P 500. So pay attention to that. What we'll do is when we get up into this area, we will start to deconstruct the candlesticks because it's going to give us a lot of understanding into the short-term sentiment up around this critical location. Candlesticks, of course, they derive their meaning from location. If you start to see candles, or at least candle signals in the wrong locations, you're in sort of no man's land, so to speak, not at critical areas of support for reversals or potential resistance areas for reversals or breakouts. They sort of lose their meaning. But at this current time anyway, we are, again, just to recap, we are still definitively sort of battling around that resistance area. Yes, we have poked our head up above that area. We are still closing technically at all-time highs. All right, we're above Monday's candle, above Friday's candle of last week. And again, expect this market to continue to drift on up higher until we get to that 3,000 psychological round number on the S&P 500. The NASDAQ itself, to me, is looking to be putting in that of a stair-step type of continuation pattern. If I bring up the exponential moving averages, this is really good. Now, although we did see a doji today, and technically you can begin to call this that of sort of an evening star 3-day reversal pattern, the good news for this market is that these types of candlesticks that have shown up as at the close on Tuesday are very common, or at least most recently, they have become very common. I'm just trying to highlight a couple of these candles. It may not sort of present itself through my screen capture software, but again, this isn't a rare sort of phenom at the moment. It is starting to, again, continue, or at least it has continued for about 2 months now. And as it stands, it looks as though this market is sort of treading water. It's moving sideways up and around its resistance area, being around just over 8,100. But ultimately, we should see a reaction either off from this 10 exponential moving average, which is what we recapped over the weekend in that pro analysis class, or we could see it actually bounce off from its rising 20-day exponential moving average. If we start to definitively crack below roughly 7,950, well, then it opens up the portal, it opens up the doorway for the market to come on back down to this rising 50-day exponential moving average. But looking at the structure of price action over the past 1.5 weeks, taking us back to Tuesday's candle as at the 23rd of April, as long as we stay above the low of this candlestick, we are still technically in what appears to be that of a stair-step continuation. Essentially, once again, we're just buying time until one of these exponential moving averages is going to propel price. Now, as I've already sort of leaded into, I believe the S&P 500 to an extent is going to lead the gains. And what I mean by that is once the S&P does get on up into 3,000, we're going to have to adjust ourselves a little bit and pay attention to where, of course, the NASDAQ is trading at, and to a lesser extent, the Dow Jones Industrial Average, because it really appears as though, all right, it's going to be hard for the Dow and that of the NASDAQ to actually continue to trend if the S&P 500 finds definitive resistance at that 3,000 psychological round number. I'm just speculating at the moment, forward looking down, I guess, a little ways down the road when it comes to the market activity. But what we're going to have to do is just assess this day by day, all right? Take it day by day. But the most important thing for these markets right now, collectively speaking, is to actually see all three of these break out and confirm one another. Now, as it stands, and this is a pretty decent segue into that of the Dow Jones Industrial Average, just to recap, as I have done a million times over the past, maybe 8 months or so, since September and October, right? We still haven't printed a new all-time high on the Dow Jones Industrial Average. We have on the Nasdaq and also the S&P 500. But as it stands, okay, this is a little bit different, technically speaking, to the setup that we're seeing on the S&P and also the Nasdaq. We've got that 3K magnet, all right, potentially pulling the S&P up higher. On the Nasdaq, as I just referenced, we have potentially a stair step. This is where it gets interesting. The Dow Jones Industrial Average, it has had past potential exhaustion gaps that haven't technically played out. Most recently, the difference was between Wednesday and that of Thursday's session last week. We got that original gap down, and what we've done really through to Monday and of course today's session is essentially just close that open window. The difference between, again, Wednesday's candle and Thursday's candle of last week. And if you pay attention to this little configuration over here, to me, I can make the argument very easily, trying to be as neutral as possible, that this may be that of a bear flag. So really, the ultimate confirmation that we are going to need to see, all right, for these markets to definitively break out and at least trend for a little bit, is to see a really positive day on the Dow Jones Industrial Average, whereby it closes back above those all-time, right, historic highs, taking us back to, which I just referenced, that being September and October of last year. If we see this, well, then this bear flag sort of hypothesis, it goes out the window. These past exhaustion gaps all over the place go out the window, and it opens up again the doorway for the industrial average to trend. Now, when I bring up the exponential moving averages, you can see that we're starting to see again a reaction off from more so the 20 exponential moving average. It's not as strong. I mean, in the past, it has been off that 10 exponential moving average, but more noticeably, all right, we're starting to really pierce that rising 10. And it looks to be, although we didn't necessarily get there on Friday nor during today's session, we are still seeing dip buyers show up just above that rising 20. So it still looks rather resilient, but at the same time, we're starting to get a little bit of mixed sentiment readings on the molecular level of these markets. Looking at this on the daily time frame over the past maybe 5, 6, 7 sessions. Okay, so pay attention to that. Ultimately, we are still bullish on this market on the macro time frame and also on the intermediate time frame. Again, we want to see these markets pierce, break, confirm, hold, and continue above these all-time highs. If we see that, we've got about 60 points to run on the S&P 500, and then what we'll do is we'll take a sort of a lay of the land at that particular time and reassess, of course, just what's happening in the markets. Now, Apple is set to actually release later today, so it's going to be interesting whether or not, or what the actual reaction is to Apple's earnings. It's going to most likely be a market mover heading into Wednesday's session. Amazon has reported, and again, it's still holding up. It looks to be setting up again, another stair-step type of continuation pattern. Largely, it wasn't helped, obviously, today by that of Google, but we still have that 1956 breakout entry sitting there, which is going to be an interesting trade trigger if we get that definitive close above it, expecting a continuation. Boeing Airlines, pardon me, we have that Bollinger Band squeeze. The longer we move sideways, and essentially the longer we hold up at this support area at 360, the odds of a bullish move, even in the face of all of this, fundamental sort of bearish information, goes up, just to sort of, again, be as neutral as possible. But again, pay attention to these Bollinger Bands. They are going to begin constricting price if we don't see movements above these swing highs or below these swing lows over here. When I jump into Baidu, if it's going to work with me, this is very interesting. We've been talking about this for quite some time now, really for the majority of 2019. But if you go back, and I mean, it's not the nicest chart. I'll go to the monthly chart, by the way. And I know there's a lot of lines on my screen, but just bear with me. If you go back to the beginning of the macro bull market in 2009, we've had really two definitive series of decelerating fan lines. Now, for the most part, we've held up above the first decelerating fan line. What we have at the moment was really the retest, first of all, in 2015, which established the angle of this second decelerating fan line over here. But more importantly, for 2019, we've obviously sold off into it really through the fourth quarter of 2018, and we're holding up really nicely on this second decelerating fan line. Now, when I change back into the daily time frame, you're starting to see that of hammers at support, not to mention all of this past support and also building positive divergence, which is really starting to work in Baidu's favor. Now, if we do see definitive breakout for the US financial markets, I understand we have earnings upcoming for Baidu, but just write this down. There is a big potential. There's a strong likelihood that if we hold up at this support, and it is at this particular point a big what if, because we haven't seen a definitive reversal off from this trend line, but if we do begin to see the green shoots, so to speak, of it, we could see Baidu up here at 250, 245 very, very quickly. We could see it all the way back up at 270, really before the end of the second quarter. Largely, it's going to be impacted largely by earnings, but at this particular time, this is a great trade setup. But you just have to manage, obviously, the time decay. Not necessarily the time decay, but just understanding that you are going to have to liquidate the position prior to earnings if you do want to get into it. Otherwise, just simply leave it alone. Understand that it's in a really nice location on the chart, and there is some really big upside potential on that particular stock. Now, Caterpillar is holding up pretty nicely post earnings. Here we are. We've got the breakout trade. We had the little entry here at 139.34 for an aggressive entry. Otherwise, you've got the 145.54. And you can see over time that this stock is just holding up above these multiple, bullish trend lines. So as long as we remain above this confluence of support, which is projected down here at the moment, at about 130 to 132, this stock has got all of the potential, just like I sort of referenced with Baidu, to come all the way back and up to 154 very quickly once we see the definitive breakout above this swing high over here. We still have this little gap, obviously, but at the moment, and say we do technically get that of a slingshot to the upside on the market indices, and say, for instance, we get a gap to the upside on Caterpillar, well, then what it will look like to be sort of occurring will be that of an island reversal, and it will be a very strong bullish setup. I'm just speculating, but if you do see a gap on Caterpillar and then you see it trade up during, say, for instance, Wednesdays, Thursdays, Friday session, one time this week or one session this week, that will be the beginning of an island reversal continuation to the upside, which is really going to confirm this first entry, at 139.34. Okay, so pay attention to that as well. We've got COP transitioning into earnings. I'm not sure actually if COP has released earnings. Generally what happens is when I put these vertical lines on my screen, I just simply know not to trade the stock. And then what I'll do is I'll come back to it the following day after the vertical line and just assess the direction of the gap if there was one, or if that was the case. And at the moment, you can see it's largely unchanged, up 47 cents, but we have a dark candlestick. I've got a feeling that it is going to be after hours. Don't quote me on that, but I'm expecting potentially a gap on this stock as soon as tomorrow being Wednesday, all right, for Conocophillips. Now, CVX is holding up okay. We've removed the past sort of bearish entries. It is largely volatile based on the US dollar. The dollar, by the way, is coming back to retest that breakout pivot, which is what we speculated may happen on the US dollar. But again, we're still very much so bullish on, again, the continued appreciation in the US dollar. And I mean, that may be a little bit of a sort of a headwind for CVX at the moment. It's getting a little bit of a relief as the US dollar sells off. But at the same time, until this stock actually breaks above its past swing high at 127.21, or we develop more legitimate sort of parameters of support and resistance structure to work with, I'd simply just leave this alone. We've got a gap here, and then of course we've got most recently a bullish gap in the opposite direction. We're still flinching around this resistance area. If this is some form of a retest off from this past resistance, this new support, you could technically say that that has just presented itself. But at the same time, I'm not prepared to actually put in a bullish trigger above the swing high of today's candlestick. Now, Disney, this has been a fantastic stock all the way back as 111, 116. They were, I know a couple of people anyway who jumped into this stock. Otherwise, we got the forward guidance and it's breaking out, just simply continuing to trend. Yesterday, we have a very interesting reversal candlestick. Emailed a few people to say you should really, tighten your stops on this particular stock. This is not an entry, by the way, because we've been speaking about the vertical line on my screen again, earnings, and it's already run quite a distance too. So I'm assuming everybody at this particular point is out of Disney if they were in it at 137.15 at the absolute lowest price. Otherwise, you were probably out sometime during yesterday's candlestick on Monday. Again, for a very profitable trade on Disney. Leave this alone until we move through earnings. Again, when you naturally see, the ADX up as high as it is, and you can see definitively now after the past two sessions, it has turned down. Same with the CCI. It means that the trend itself needs a little bit of time to breathe. And that's really what we're seeing. As we've been on this sort of parabolic rip to the upside, this move is essentially done. It's not going to continue. It's run its course, and now you need to allow the stock to have some time to sort of digest the gains, find that next support area, probably off from one of those rising exponential moving averages, moving into earnings, move through earnings, and then we'll assess that trade with the gap setup. Now, this is probably what you're sort of checked in for at the moment. This is the share price or the chart anyway, of Google. Google's looking really good as at the close on Monday. But again, this is another example as to why we do not hold option contracts, right, over earnings. So let me just recap this stock for you. We've been long Google. I mean, it's actually before the 1156 trigger. It was on the Bollinger Band breakout. But anyway, you can go back to 1106. Here are the most recent entries to the upside. These are all bullish trades. And in fact, our target on this stock was up here at 1,267. So it worked out quite nicely leading into earnings. I haven't heard anyone who's actually held on to Google. I mean, I speak about closing out trades moving into earnings ad nauseum, and I'd be shocked if someone did. But again, if you did, this is a really good learning opportunity as to why you do not speculate, or at least hold winning positions into earnings, or even losing positions for that matter. You just simply close it out, all right, and then assess the gap once earnings is concluded. Anyway, I'm going to delete this vertical line, but just to show you this, it really looks as though, again, we've recalibrated, obviously, from 1,300. We're trading just below 1,200. It's about a $100 sell-off, or at least a $100 gap. But the good news for Google is that we've sold on back down to this critical area of support over here. Now, again, is this going to be the bottom? It's too early to tell, but what you can do is just pay attention to the actual candlestick color of that earnings announcement. So although we gap down over $100, on decent volume, the candlestick itself is white, which is meaning that there was a tendency of buyers during today's session on Tuesday to actually jump back into the stock and to begin buying it off from this area, which is more or less the psychological round number of 1,200. This sets the tone, if I can bring up the exponentials, for a continuation off from, oh, I just pushed the wrong key, off from that rising 50-day exponential moving average. You're probably going to have to give this a little bit of time. Again, we've got Apple's earnings, which is probably going to influence in one way or another anyway, the trajectory of what Google does come Wednesday. But what we have potentially here, it is very much so early days, is the beginning of another gap closure type of move, again in the prevailing bullish trend. So the trend itself, it hasn't changed, although it has been sort of struck on the head. It may just go through a process of sort of moving sideways here, but ultimately, if you do begin to see prices rise off from the rising 50, it sets the trade up to place a stop below the low of today's candlestick and to trade it up to about 1,275. As it stands though, as at the close today, I would simply leave it moving into Wednesday's session, but there is tremendous opportunity for that to close and then to continue above the swing high, which we did price in yesterday as at the close on Monday as well. So pay attention to that. IBM is simply moving sideways. Again, what I was just trying to reference on Google is somewhat similar to IBM. However, I believe it's going to play out a little bit more quickly. So we got the original gap down on IBM, and these are the primitives that we originally were working with. You see our price action is largely just being contained within the actual price action of this particular candlestick just here. That, I mean, although we're probably not going to see that on Google because Google's candlestick is a lot smaller, or at least the real candlestick body is a lot smaller. What this is doing at the moment is allowing these exponential moving averages to coil. And we're starting to see, again, the white candlesticks, the engulfing candlesticks. And if these markets do break out, which I'm expecting they are going to at some point very soon, especially the S&P 500, you should see a little bit of a follow through into IBM. And it sets the tone again for that 141 entry up to close the gap at about 144. So pay attention to this. I like IBM because we have, of course, reset a lot of these oscillators. If I can bring up the right template over here, we were tremendously overbought for a prolonged period of time. And yes, technically speaking, this is a little bit of bearish divergence, but that's naturally what's going to happen. When you see a stock, first of all, gap and then continue for a period of 3 months, you're naturally going to see momentum fizzle out of the stock. And it made a lot of sense because we were rallying back up into this critical resistance area, which is hard to see on my screen, but it is coming on down here. We tagged it more or less. And now I think we're going to get that secondary shot back on up into that resistance area on IBM. So pay attention to that. Wouldn't surprise me to see this stock pop at some point during this week. So that's that trigger there. And to conclude with it, this particular juncture is Netflix. Netflix, again, is in a pressure cooker. So very similar to the Baidu setup, if I can push the right key. Remember I was talking about the Bollinger Band squeeze? Well, when I bring it up on Netflix, although you can see price action last week anyway, piercing outside of that top Bollinger Band, largely if you take into context what this stock has done or simply what it hasn't done, there is a pressure cooker type of scene under the surface of this stock. And when you have a look at the ADX, you can see it's reset down. It's very close to 20. The CCI, it's still very close to 100. This is telling us that when we do see that engulfing candlestick, that one sort of long day white Morobozu candle, and if you see that CCI spike, right, even prior to it actually breaking out, it's a big forewarning that the impending breakout is very near. So although we don't have the signal yet, pay attention to the CCI and also the ADX. If you see these two turn up definitively, if you see the CCI crack above 100, right? Definitively crack above 100 on a white candlestick, a long day engulfing candlestick. Well, it sets the stage for a breakout on Netflix, which is going to essentially put it into, all right, a trend. First of all, back up to 420 or 425. I've got 416 on my screen, but you can again pay attention to these swing highs in June and July. But what gets exciting is if we do and when we do crack above these all-time highs, to see this continue to trend as the markets move, again, in their trend further into 2019. So it's a very interesting landscape. I hope that's helped you. If you have any questions, email me. Otherwise, jump into that pro analysis class, all right? You can sign up. There is, boy, I don't know how many. There must be months and months and months and months of past videos up online on that website that you can look at anytime you want. Otherwise, we sit down on Saturday in a recorded class. We post it up Saturday morning, and you can go through the analysis of the markets, the forward-looking analysis, and also individual stock setups and analysis leading into the week upcoming. All right, everybody. Sadadua says at the close on Tuesday, have a good evening, and I'll be back with you later in the week to recap some more stocks and also talk about the US financial market indices up and around their resistance areas. Hopefully, we'll be talking about a breakout. All the best, everyone. Bye.